Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, it's earnings season once again, and we try, as always, to keep you up to date on the most recently released financial results of the companies on the Trinidad and Tobago Stock Exchange. And today we're taking a look at two of the local banking giants on the Trinidad and Tobago Stock Exchange, which are Republic Financial Holdings Limited and First Citizens Bank Limited, for their 9-month period ended June 2018. Let's look first at Republic Financial Holdings, and for this 9-month period ended June 2019, the company, or the group rather, reported diluted earnings per share of just around $7.59, which is a whopping increase of almost 24% from the $6.13 reported in the prior comparable period. Now, take those results with a pinch of salt. There were some one-off items inside of there, and by our estimates, adjusted earnings per share after excluding those certain one-off items would have been $7.02, which is still a very healthy 14.5% increase on the prior comparable period. Driving those results, net interest income was up 11.3% from $2.5 to $2.8 billion, and operating profits were up overall from $1.6 to $2.27 billion, and that's a 38% increase. Now, inside of that operating profit number was a post-retirement medical benefit provision reversal of approximately $440 million, which would have impacted very positively that operating profit line. Nonetheless, net profits after tax was up 25.6% from just around $1 billion to $1.3 billion for that 9-month period. Now, when we take a look at the income story, we see a nice positive upward trend here over the past 4 years, with net interest income growing on average in blue by about just around 7% on average over those past 4 years. Similarly, other income, which includes fees and trading commissions, etc., would have grown just over 6% on average over that 4-year period as well. And we see a very nice healthy jump from 2.5 to 2.8 billion in that net interest income, and some of that would have been attributable to, of course, that acquisition by Republic of Cayman National Corporation in the past period. Now, when we take a look at profits by geographical segment before eliminations, again, a very nice upward trending slope. Some of the points to note include that a 37% growth year on year in the Guyana segment in red from 106 to 144 million, as well as an almost tripling in growth of profit before taxes from the Cayman operations, which has been lumped into the Suriname and EC Ghana and Cayman Islands segment from 258 to 381 million. And much of that growth, again, by reason of the acquisition of Cayman National Corporation. Now, overall, at a price of just around $121 or thereabouts, Republic Bank is trading at a price-to-earnings ratio of 12.6 times, just or well below, actually, the sector average of 16.4 times, and offers investors a trailing dividend yield of 3.6 times, and also a market-to-book of just around 2 times, slightly below the sector average. So an interesting case here for Republic Financial. It's priced as pretty much a value stock at 12.6 times, but its market-to-book suggests of 2 times suggests it's sort of leaning towards a growth valuation stock. So on the basis of that very good positioning in Guyana, the acquisition of Cayman, and expected future acquisitions, particularly of Scotiabank's operations across the Caribbean, Bourse maintains its buy rating on Republic Financial Holdings Limited. Turning quickly to First Citizens, and for the 9-month period ended June 2019, the group reported earnings per share of $2.19, which was a 14.7% increase from the $1.91 reported in the prior comparable period. Now, again, certain items not on the revenue side, but on the cost management side would have impacted First and helped to deliver this very excellent performance in terms of period-on-period growth. Net interest income, nothing to write home about. Net interest income was up just around 3.8%, and total net income was up just around 3.3%. However, impairment expenses net of recoveries did decrease by almost 93% from $168 million to just around $12 million there. So there were some write-backs, some reversals, etc., and that would have led to this overall great performance, with profits after taxes increasing from $483 to just around $553 million. Now, when we take a look at First Citizens' profit before tax by segment, we see one very consistent upward trend, and that is the retail and corporate banking segment, which has increased very much in a linear fashion over the past 5 years. Treasury and investment banking in that green segment has bounced around, but it did recover quite nicely from 2018 to 2019, increasing from 217 to 325.6 million. And there has been a general decline in the trustee and asset management segment in terms of profit before taxes, which is that yellow segment, which has decreased from 84 million in 2018 to just around 69 million in 2019, or that's for the nine-month period ended June 2019. So at a price of just a shade under $40, First Citizens is trading at a price earnings multiple of 13.5 times, offering investors a relatively healthy dividend yield of 4.2% above the banking sector average of 3.6%. And it does have a fairly healthy trailing dividend payout ratio of just around 57.3%. So on the basis of fairly modest income growth, but again tempered by relatively attractive valuations, Bourse maintains its neutral rating on First Citizens. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.